Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the last time this week. It is Friday, October 19th. Not a lot of crazy stuff happened. Another fairly volatile day, but markets, for the most part, closed flat. Russell struggled, but we kind of maybe expected that a little bit. But we kind of end the week with not really, it was a lot of back and forth, but we really didn't go anywhere unless you're kind of talking about the Russell. So looking ahead to next week, we've got a ton of earnings. We are in the middle of earnings season. There are, I want to say, 168 S&P 500 companies reporting earnings next week. I've kind of highlighted some of the big ones. You got a Microsoft, Google, or Alphabet Inc. We'll always call it Google though, right? AT&T, Verizon, Intel. So we've got some big names coming out. Apple isn't next week. Facebook isn't. They're both the following week. But some pretty darn good sized names going into next week's earnings. So be sure to stay on top of that, of course, as we all know the importance of that. Taking a look at our overall market, again, another back and forth day in the market, really kind of closing towards the bottom end over on the S&P, but holding the 200-day moving average. Again, it's maybe a slight victory, but maybe it is a victory as you kind of go in and look to the intraday just to kind of get a feel for how the day played out. Kind of had a nice run to the upside for a bit going on, and then kind of slid down, nothing dramatic, but kind of slid down throughout the rest of the trading day. We're still kind of smack dab between resistance and support, kind of using that 200-day moving average as its current support level. Not really a whole lot has changed from where we were yesterday, technically over here on the S&P. So continue to watch how it performs here, but continue to expect volatility as we've kind of grown accustomed to, right? It'll end, but right now probably shouldn't expect it to end on the next trading session. So we do continue to remain overall pretty volatile. NASDAQ, very, very similar situation where we're, kind of smack dab in the middle between support and resistance. We have, of course, closed above the 200. So again, while I don't think these are the, biggest accomplishments ever, I do think they are small accomplishments if you are on the bullish side of things. And so I guess little wins matter too, right? Over on the Dow Jones, again, very, very similar situation. So really not a whole lot to report as we look at the technicals on the S&P, the Dow, and the NASDAQ. Really, we're just kind of smack dab in the middle of support and resistance, all hovering somewhere just north of their 200-day moving averages. Over in the Russell, of course, that weakness carried on. We actually closed at that support level, at that previous swing low that we put in here last week, very bearish. Again, none of us are probably too surprised because we're seeing a lot more bearish signals in the Russell than we have been in the other indexes, and certainly for longer. Watch that support level. If that breaks, there should be, of course, more room to the downside. Really no strong reason to believe that the Russell's ready to turn it around or anything like that. But we did kind of close the week at that previous swing low. So we can, of course, and probably should monitor how it performs there. While I don't ever, buy in situations like that, downward trends testing the previous swing low, that is support. And again, I always want to respect, those price points, no doubt about it. Over in the material sector, we did break. I'm just going to zoom out just a little bit so we can kind of see where our next real major level, at least my major level of support is on the material sector. Break and close below that little support level. Not a great look. Again, we'll always want to see that carryover. This is a bearish signal. I don't think you can interpret it otherwise. But that price movement that we see, the following candlestick, is always very important when it comes to breaking these support and resistance levels. We see it all the time on our charts. If the ball gets rolling and we continue, there's usually, a good chance it's going to continue to run that direction. But if that never breaks that low or that high, if we're looking the other direction, it really didn't mean anything, right? So watch how it responds. If we do break these intraday lows on Monday, I will certainly personally consider that, yet another bearish signal. And that one thing that's interesting in this sector, and you're seeing a lot of stocks within this sector at support right now. There's a lot of room to the downside if these support levels do give out, so that will definitely be a storyline I think we'll be following next week. Looking over at energy, after basically all week long kind of dancing on that support, we did break, at least in my opinion, we did break and close below that support level. Again, much like the material sector, not a good look by any means from a bullish perspective. Again, watching the price action on Monday is going to be something I think is very important in a lot of things, but certainly things that are just breaking through levels of support or resistance, no doubt about that. Not a good look from a bullish point of view. That's held. It really fought all week long, and it didn't give out till pretty late here today in the trading day, but certainly closed below support, well towards the bottom of the day's candle, well off of the day's intraday highs. That's a lot of bearish sentiment on one candlestick. I was comfortable with the notion of buying energy while that support level held. That's not the case today. That, in my opinion, that's a break that's not great. And maybe it doesn't matter, but I'm going to be very cautious from a bullish and very open to bearish opportunities, particularly if we continue that movement on Monday. Over in the financial sector, really another back and forth day. As I don't think anyone really has a great read, bulls or bears within this sector. We've seen some, financial stocks that have good earnings, some with bad earnings, really just kind of continuing to dance, but really hasn't done anything, right? We're much like our broad indexes. We're somewhere maybe a little bit closer to support than resistance, but kind of in the middle of that support and resistance currently. This price point, down where we're looking at support, probably, to me at least, is very important. That can be a place where a breakdown can occur. Of course, now it's going to be a place where buyers can step back in. So just because I probably wouldn't be one of them, I will certainly respect that support level. So not a ton of new information over in the financials. As we shift gears over into the industrials, I don't know, probably going to depend on you. I think you could argue that we closed below support like we did over in materials. I think you could also argue that you're not sure enough to call it. I think that's easily remedied. Whether you think it is a clean break or not a clean break, we can use this intraday low that we put in here yesterday, which pretty much lined up very close to yesterday's intraday low as well, as a downward signal. If that level breaks, I will personally be looking at that as a bearish signal in the industrials. I don't think it's a clean break today. Like I said, I think you could argue it either way, but really, even whatever side you find yourself on, I think any even just aggressive entry, because that would be an aggressive entry if I move in on Monday if it breaks today's low. I think you need at least that much to get the entry, though. I think that at least for me, as aggressive as an entry point as you could put together. So watch how we respond there. Definitely troublesome areas as we see some things breaking through some support levels. Over in technology, not quite the same looking chart. Looks, of course, very much like our indexes, very much like our NASDAQ, where we're kind of smack dab in the middle of the support and resistance price points, hanging out with the 200-day moving average. Not really much to see here, I don't think. I don't know. If you were a bull yesterday, you're probably still a bull. If you were a bear, you're probably still a bear. If you're a giant wimp like me, you're probably sitting tech out. So at least that's probably where my brain is on tech. Over on staples, led by good earnings, particularly Procter & Gamble, who had a very positive report, were able to use yesterday's close. Of course, yesterday, again, that candle yesterday looked pretty bearish, but we never, of course, had any movement to the downside. Matter of fact, we had plenty of it to the upside on pretty strong earnings. I think you have to basically just come back and say that this was a failed break out at this point in time as we worked back into this trading range. It looks like this was just, a failed breakout point. Now that support level breaks again, I will look at that as a potential sell signal. But until that does, or until we approach resistance, I think you have to have a little bit of a bullish posture within this area. That's how fast it can, of course, change. A few days ago, I was looking for it to work back into the breakdown point for a kiss goodbye. I got into the breakdown point. I never got the kiss goodbye, though. So that's the great thing about preparing. I was looking for that and I didn't get it, but it didn't hurt me any, right? Because, well, the signal doesn't develop, the signal doesn't develop. Yeah, I wish I would have been there, and I had I known Procter & Gamble was going to destroy earnings, I would have been. And I would have told everybody I know and love to join me. So, but certainly we're back into a pretty bullish situation right now over in Staples. Watch that high point. We obviously have ran into some serious issues in that 55.50 range as of late in Staples. So we should, of course, continue to respect that. Over in utilities, yesterday, again, this is how you can be wrong and it not matter if you're on the right side of things. I kind of felt like utilities was still bullish, as you guys know, but I also felt like it was kind of seemed like it was running out of a little bit of steam. Not quite as excited for the bulls in it. No bearish signals or anything along those lines. Of course, then today, utilities has a really great day, working all the way back into resistance. Of course, that's why you want to go with the trend. That's why having identifiable things are easy. Whether I was a bull, hey, if I wasn't a bull in utilities today, bummer, no big deal. But it only hurt if I was a bear, and I had no reason being a bear, right? So worst case scenario, I didn't make any money in the utility sector today. Best case scenario, I was trading with the trend. So of course, we've seen a lot of activity at this resistance zone too on the utility sector. The way I think that we approach this is we go into the weekend and into next week, preparing for some potential breakouts. We very well may break resistance that next week. Of course, we're close enough that it could theoretically happen on Monday, but resistance is hard to break. And so, if we don't break, no big deal. If you want to bet on resistance holding and look for bearish opportunities, I would understand that as well, because again, that resistance has been very, very strong. I would lean more towards look for breakouts, breakout opportunities, even though I wouldn't, buy at resistance. I'm not going to necessarily go bearish. We are seeing a lot of positive momentum. I wouldn't feel really comfortable sector-wide, at least, going into utilities, even with the strong level of resistance to hold it down. But we'll definitely watch that together next week. Over in healthcare, another pretty steep day of selling. Certainly was a weaker area today, which is almost weird to say because I haven't said that very often for months now. Again, much like everything else, we're kind of between support and resistance. I'm not bearish. Maybe I should be overall on the healthcare sector. As long as it's continuing to move down, there will be certain things that I would be open to trading over on the tackle trading Twitter just a little bit ago. For example, we're looking at ABV. I think they have earnings the week after next, not next week, as a potential breakdown. If there's going to continue to be weakness in the sector, I'm going to be open to trading things that are showing weakness. And of course, breaking a major level of support is a sign of weakness, right? So I am going to be open to things, but I'm not going to try to pick tops or anything like that. I think it's pretty clear, at least as of where it stands today, how to play, this sector bullish. And I think that is a break back above this resistance. I think if we can break through that resistance, that would be a pretty, good buy signal. We may or may not get that. I don't control that, but, think about what that would look like. If that breaks, that means somewhere next week, we end up putting in a lower high here, right? Some buyers step back in, we run back up and take out resistance. So we would see a little bit of a technical shift in momentum if that were to happen. Obviously, we're not in that phase. We're still in kind of the selling phase. And until that happens, well, it's not happening, right? So, but we're kind of smack dab in the middle. For me, at least, that's kind of where I'll be looking at from a bullish point of view. For the first time in a long time, I am open to bearish trades within this sector, but they'd have to be something like ABV that was breaking what I considered a strong level of support to really get me interested in trading. So that's the type of setup that I would want from a bearish perspective, because I still overall do believe in this sector. Looking at the discretionary, an area that I'm not a huge believer in right now, we, much like the Russell, kind of closed down at the support level. So while so many other things are kind of between support and resistance, Russell, the discretionary here, both closed, really right down at support. If this breaks again, this is kind of the second opportunity, right, for bears to come in. If people buy off of this support, I'm not one of them, but I get it. If they're not buying though, and that breaks, there probably is still room to the downside within this sector. So Certainly very interesting as we kick off early next week. Again, I'm not saying it will happen because I clearly don't know, but when we're at support, if we're going to break it, it could happen as early as the next trading day, right? So this can be an area that, if you do find yourself in a bearish mindset and are open to bearish trades, that you can kind of, look for over the weekend for some potential early week bearish entries. Again, maybe we don't break that and we don't see them, but again, we're here to prepare, right? Because we don't get to know the future as much as we want to. Over in the real estate sector, held its own, had a strong showing, did sell off of the highs, but really did hold its own today. And forgot to log in there. And I'm not changing my tune. It's going to basically have to break this level of resistance way the heck up here to get me to not look at this from a bearish retracement point of view. That very well may happen, but until then, I'm going to be looking at this from a bearish retracement point of view. Again, much like we said yesterday, it's just not tomorrow, or it's just not, in this case, Monday. If we start to see some struggling at that old breakdown point, at that 200 average, start to see some downward movement, I think that I will at least be looking at as a potential bearish retracement entries. And if we don't, well, then I probably won't do anything for the next few trading days on real estate. But definitely a challenge. Definitely a challenge. It's responded well, though. I do have to give it credit. It has shown a lot of strength over the last couple days. It easily, could have gone the other bearish way pretty easily, I think yesterday especially, and it didn't, and showed some nice movement here today. It kind of run into trouble in that old support resistance moving average zone, which is probably kind of to be expected. So that's where I will be. I'll be looking at retracements over there. Over in communication services, again, continue to be pretty volatile and not go anywhere type of a day within this sector. Quite a bit of up and down, but really not any decision had been made, much like the broad market, where we have resistance up here, support down here. We're a little closer to the top end than the bottom, but we are kind of in that general middle range between support and resistance in this sector right now. As we work into the next 2 weeks, 1.5 weeks, these next 2 weeks are going to be big with earnings. I think next week is the biggest number-wise, if I'm not mistaken. We should start to get a little bit more and more clarity within these different sectors and the market as a whole. But we have a lot of earnings that can impact the market in the days to come. So as we shift gears over into our commodities, we closed the week out holding the breakout point on gold without ever really taking off. But we did hold the breakout point, which I definitely consider a bullish sign. Really nothing to say here that hasn't been said many times before, as long as we stay above 1220. And I think every day that we close above that is a positive thing, just a little bit more positive for traders. We haven't taken off yet. That's not necessarily a bad thing, though. As long as that holds, I will continue to look at this from a bullish point of view and until I have any reason to think otherwise. Like that it's been able to hold that breakout point for now over a week. I sure would have loved it to take off running, because that's always, more fun, especially if you're trading it. But, hasn't done anything to change my mind technically. That's for sure. Over in silver, very, very similar situation where we we looked at yesterday's candle. We had the 20 crossing, had that back here, that 20 crossing the 50. We had that upward movement and definitely saw some people moving into silver today. Did kind of sell off of its highs. At one point in time, this was looking like a really strong candle on silver. But again, it's one of those things that we're kind of in the middle of the range between support and resistance. A lot of traders, you probably know some, I know some, and am one of them, think that really the signal for silver is above 15. And so while we're not selling it by any means here, we're just not ready to buy in this range. But really, I think it's pretty unchanged. It really is kind of continuing to hold its own, much like gold, a little bit of a different look, but holding its own. And it's just kind of tough to break through stuff, right? And so it just because it hasn't taken off doesn't mean it can't. We've got to like some things about silver. We've kind of put up those higher lows, We're above the 50 for now over a week. We're seeing a 20 crossover. So there are definitely things to like from a technical point of view. There's just a lot of resistance, both real and psychological, I think, at $15 right now, keeping some money out of the market, or maybe a better way to put it, some bulls, keeping them from jumping in just yet. Over in the dollar, we did struggle at that resistance that we were looking at yesterday. Really kind of, I don't think your opinion has probably changed. I think, you can look at this. One thing, I maybe changed a little bit in the last, 24 hours is if this breaks this 96, now that I've seen some downward movement off of it, that could be a breakout opportunity I would be interested in. I think that's really what, the next play is if that happens. Certainly it hasn't happened today. I don't know what it's going to do, but certainly struggling at resistance. I think a break is probably the technical thing to be looking for here. I guess you could argue you should be going short at resistance, but again, we've just broken back to the upside, made a higher low. I don't think the chart really supports a bearish view in any swing capacity, at least. Maybe on some intraday, there could be some opportunities. But we continue to hold but fight at that resistance level. Watch 96, wherever you find yourself. That's looking like a pretty important price. It's funny how new prices develop and they become just important. And it's a great thing about technical trading, right? Things develop, everybody can see them, and we're all kind of on the same page. Yeah, 96 is a big deal. And maybe I think it's a bigger deal than the next guy or gal, but they look at the price and they can see that some people think it's a big deal. So that's, I think why technical analysis works. As we move into our energy, natural gas, another volatile trading session, working all the way back down near that swing low that we put in last week. I maintain the same general position today as yesterday. I think we're look at this and treat it as a range-bound situation now. We can either buy a break, we can theoretically sell a break to the downside. I don't really think, again, I get people buying off of the low because that's a good risk to reward. So I guess we could look at it from that point too. But I think really when we think about it from more of a broad perspective, we're developing into a fairly reasonable sideways range, it looks like right now on natural gas. And whenever we do that, my preference is to wait for a break, whichever way that will occur. So for me, that's what I will be looking for is the break of that 315, the break of about 335 to the upside. And yeah, there's some middle in here, and so we can do some stuff in there, but I don't know. That's kind of what I'm going to be watching for, at least on natural gas, as we move into next week. I could see it going either way. I mean, that natural gas, it can move, and it can change its mind real quick, in my experience. So it'll be interesting to see where it will stay in that trading range, probably, because that's when we get stuck in ranges. That's usually what happens, right? But that's only, temporary. Sooner or later, everything comes out of its trading range, no doubt. Over on crude oil, as we wrap it up, ran up into that 70, which of course that 70 was a big deal for a lot of traders when they thought it was support. And of course, they flipped it around and now are looking at as resistance. I think crude is pretty easy technically right now. If you're, if you're not in it, I think you've got a couple of options. You've got an option to buy if it breaks back above 70 or the 50-day moving average just north of it. I think you have the option to sell if it breaks today and yesterday's low. That would be a little bit of a breakdown. Or I think you can watch for a pullback to the 200-day moving average for a potential signal as well. Or you could do nothing, you're right. But I think technically, when I just look at the way it's traded these last couple of days, I think it's pretty easy to say 70 is a big deal. You got to get above it, before you buy it. Again, different story if we're buying off of the 200 on next Wednesday or whatever. But as it is right now, break of 70 to the upside, break of these intraday lows to the downside, or play intraday at the top and the bottom, or you can just kind of sit back and see what it wants to do. But I do like kind of the way it's set up, because I think that's pretty clear to me, at least from a signal point of view. Breaking up is a buy signal, breaking down is a sell signal, and makes my life easy, right? Probably means that, I don't have to do anything, but it's pretty easy, in my opinion, to call that the read right now, at least short term. So, ladies and gentlemen, that is where we find ourselves after a pretty volatile week in the market. One thing to keep in mind, it was volatile. We saw a little bit of everything this week, right? and certainly a lot of back and forth. But really, I mean, think about what it is on the longer term time frame. You look at the S&P 500, pretty, middle of the ground doji. Same with the NASDAQ. So while today or this week was kind of a wild ride, we didn't move all that much. We just moved a lot on the day-to-day basis, from the top of the candle to the bottom. So it wasn't quite as crazy as maybe it seems in real time. But definitely we saw some intraday movements, no doubt about that this week. Like I said, expect, continue to prepare for this volatile market because, it's here until it's not. Be sure you're staying up to date on those earnings. We're going to get, just hammered with them next week. 168 S&P 500 companies. There's a lot of companies that aren't in the S&P that are reporting next week too. So a ton of earnings coming our way over the next couple of weeks. But that will do it for today and for this week for the market recap. But as always, ladies and gentlemen, it is always my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit the notification bell if you haven't already to stay up to date with any new videos that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're keeping an eye on each and every market day. If you enjoyed the market recap, it is always helpful and appreciated if you give it a thumbs up to let us know that we're on the right track. Of course, as we go into the weekend, make sure you're getting through those scouting reports, getting through your watch list, preparing for next week. Traders are always preparing. But of course, make sure you're spending time with your families and friends doing things that you love as well. With that, ladies and gentlemen, get out of here. Happy trading, and I will see you in the next one.